Hey guys, welcome back to the channel. In this video, we're going to go over some information about the stock market for the upcoming week. Take a look at the charts on all the plays that we currently hold or follow or swing trade like normal. And we're going to take a look at some information as far as what we can potentially see volatility wise. Talk about some earnings on some of the stocks that we, like I said, we follow or we hold. And I just kind of go from there. So I appreciate you guys tuning in, those of you who are. And like I mentioned in my last video, that I was on vacation last week. A good little time to go unwind and refresh. And I did kind of keep an eye on the stock market and everything. Did a little bit of trading, but not too much. Kind of unplugged for the most part. And so kind of want to just recap and update everybody on some technical analysis on the companies that we talk about on the channel. So before we do that, we're going to go over the Forex Factory calendar, and we're going to look at what we have coming up for the week. So today's pretty much nothing, okay? So you won't expect too much, really anything today. Tomorrow, however, kicks off a very busy week as far as data is concerned that's going to come out. So we have red folder event at 9 a.m. the Jolt job openings. All right, so keep an eye on that. At 9 o'clock, you're either going to see an overreaction to the upside or to the downside. So just kind of keep an eye on this here. Again, this is Forex Factory. Go to Forex Factory and then just go to the calendar, and you'll see all of these red folder events that can potentially impact the stock market. Okay, and just make sure it says USD whenever you're looking at something like from America, because you have every other country that'll release data too. This is Tuesday. On Wednesday, we have the non-farm employment change at 7:15. At 7:30, advanced GDP quarter over quarter. And then the big thing that we have later in the day starting around 1 o'clock is the Fed. So you have Fed's funds rate, the statement press conference. This is where you're going to see a lot of volatility, because I think a lot of people are hoping that Jerome comes out and says that they're going to cut rates. And if he doesn't, then you can see a little, might see a little push to the downside. But I think for the most part, people expect that he's not cutting rates. I think the big push is going to be either he comes out and says he's cutting rates, or for some reason he comes out and says he's not coming back. I don't think that's going to happen. He's already said that he's not going to resign, okay, regardless of what Trump tells him or how many times he tweets and everything like that. And then on Thursday, we have core PCE, employment cost index, unemployment claim. So that's going to be interesting. And then on Friday, we have average hourly earnings, non-farm employment change, and the unemployment rate. Okay, so, and then at 9 o'clock, the ISM manufacturing PMI. So a lot of red folder events. You could expect some volatility. So if you're a short-term day trader, make sure that you are aware of the times that this is happening, and kind of keep an eye on what numbers come out to make sure, if for the most part we've been seeing nothing but positive data, so that's a good thing. And but you just never know what could happen as far as when data comes out, because a lot of these things are just kind of they're basically lagging indicators basically of what's been happening. So I just want to give you an update on that. So let's take a look at some of the plays that we follow, and we'll go over the charts and then just kind of go from there. Alright guys, so we're starting off with Apple. Now, we don't necessarily own Apple directly at this time, but probably we'll do a swing trade on them this week is what I'm eyeing. Currently, Apple's been kind of just hanging around 200 for the longest time, like 200 to 213 or whatever, and it just kind of goes back and forth. They have earnings this Thursday on the 31st. All right, and depending on what happens there is going to be dependent on what it does. If it falls and kind of crashes down below 200, or we get a leg up and start moving. I think we're going to get a leg up and we're going to start moving, and so I'm eyeing to potentially get in here probably on Wednesday morning, Wednesday afternoon, depending on what the stock's doing. I want to try to buy it at a low point, and so we'll see. Now, if it starts moving up beforehand and starts kind of trickling up before earnings, I probably won't get in. I'll probably wait for it to potentially kind of pull back a little bit before I would do that. But Apple's one to keep an eye on this week. And right now we have a support of about 214. If we fall below that, you'll have a support of 203. Like I said, 200 to 213, 214. So if it falls a little bit lower than that, cool. Or if it just kind of trades and just kind of consolidates pretty much all week, that's fine too. Amazon, ticker symbol AMZN, high of 242.52. We're getting pretty close to. We have a solid little uptrend, slow and steady. They also have earnings coming up on the 31st after market close. So this is another one. We currently do own Amazon, and depending on how the stock reacts is going to be dependent on what I do here. Like I said, if it falls down prior to earnings, and that would be a signal for me to try to get in. If it pushes up prior to earnings, then I'm just going to sit tight and let it do its thing and kind of go from there. I would love to add more to this one. However, I'm so far away from my average cost that it's kind of hard for me to justify going in and getting more, although I know it probably would benefit me for the longer term. So I'll have to kind of think about it. But 222 is your current support. Your resistance 242. If we get through that 242 level, we should start seeing it move pretty well through, like say, blue sky territory. We should start probably going up and testing 250 at that point. But slow and steady wins the game on this one. It's not a very volatile stock like a Tesla. You're just going to see slow and steady up, down. So just keep that in mind, okay? Next up, we're going to look at is Nvidia. Nvidia. 175.22, your high of the 180-day 4-hour time frame. This is kind of the same thing. A beautiful uptrend. Don't be surprised if you see some type of pullback. If you do, like a really aggressive pullback can take you all the way down to about 160, or actually below that, about 153. But if it would bounce off of that, then that's not that big of a deal. If it fall below there, then you can eye your 140s, your 130s. I don't really see this happen. I don't see it going down that far. If it did, I would probably come back and buy some more at those levels. But if it gets above 175, then we're probably going to continue to move higher on it. Next up, let's take a look at SSL. I did open up another swing trade on this one here, and I'm getting anywhere from 5 to 15% on my swings is what I'm looking at. High of 622 on the 180-day 4-hour time frame, a low of 273. There's going to be a day where this one eventually starts moving, and it has to really get above. It needs to get above probably, I would say, about $6, or really $5.75, in order for me to take it serious. That it's going to go up longer term. I think overall $20 would probably be in the realm of something that it could reach eventually. However, right now it's just trading in between. It's kind of like in between like 450, 550, 450, 550. So if you're eyeing some swings, this is actually one that's kind of predictable. You can kind of take a look at. Okay, let's take a look at Tesla, TSLA, and do need to redraw the fib level here. So 208.56 would be your low on the 180-day 4-hour time frame. Your high roughly at about 485. Let's see what is going on here, Thinkorswim. So 208.56. I don't know why it's telling me there's not enough room on my chart. There is enough room on my chart. There it is. Okay. So good thing about this one, we did cross over. The golden cross breakout indicator did cross over. Now we just have to hold here. Okay, we don't want to see it fall back down and come back and test like 300. We want to see it hold at least at the 315 level. We're currently at about 322. Even if we consolidate up and down, that's okay. And we want to see it come back up and retest and also take out about that 340 level is what we want to see. And then your next level is at 347. I want to see it take that out. And then 380. And so this one here, guys, now that we're past earnings, I think a lot of the negative catalysts and everything that's been just hitting it. I think earnings is probably the last big thing that's kind of been in our way for this to start recovering and start moving up. All right, with the exception of Elon Musk getting on the internet and talking politics. All right, but it's got a lot of things going for it. Got a lot of really good positive catalysts coming out. We just have to wait on them, and I think that this one overall is bullish and is going to eventually start recovering and start making its way back up to that $400 mark. And just take some time. Okay, keep in mind, I know this one's volatile. It's aggravating, but when it starts moving in the right direction, it really starts moving in the right direction. And if we can get up closer to that 350 level and actually take that out and hold there, that's going to be a great sign for us moving forward. And then pretty similar, TSLA, this is the ETF. It's basically, your chart's going to look pretty much the same. Right here, we do need to get up, but the number here you're looking at is that the big resistance zone is going to be about 1375 for this one here. But this is dependent on Tesla, so don't look at this one and think like, oh well, it's going to move. It can move without. No, it's whatever Tesla does. This is going to move with it. Tesla goes up, this goes up. Tesla goes down, this goes down. So for those of you looking to trade this one, week to week trade, this is actually a really nice and aggressive ETF that you can trade. I'm holding it a little bit longer term, but I'm not holding it for too long because I'm going to be looking to take some profits hopefully within the next month or two from this swing here. Zion Oil and Gas, we have been kind of just hanging around the 18 to 20 cent mark for the longest time. This week again is going to be another another interesting week, because if they get news, great. If they don't, I'm not sure what's going to happen. I've been saying, well, I think it's going to kind of start sliding down, but it keeps holding support. All right, keeps on holding support. The fib levels did update. All right, so let me take a look at what they're telling us here. So 26.99, roughly about 27, is still our level of resistance right here overall, but the bottom now is at about 5 cents. Okay, so it did change a couple of things here. 21, about 22 cents is your big resistance zone. About 18 3/4 cents is your support zone here. So if you fall below that, then you're eyeing 16 cents as support. But if you can break above 22, then keep an eye on 27. All right, and if they can take out 27, then you're going to look for 30, and then we'll just have to kind of go from there and update the fib level from there. One more stock I want you to take a look at and keep an eye on is CCJ, who also has earnings this week. I think on the 31st as well, before market open. So I'm going to keep an eye on this one here, and I may buy some of these on a Wednesday as well and hold through earnings. Just to see, this has been, again, another company that's been a solid uptrend for months, and I'm just going to see how the stock is acting prior to earnings, based on if I'm going to get in before earnings or after earnings. Okay, and this is going to happen on Thursday before market open. All right, before the market opens. So anyway, guys, that's all I got for you in this one. Just wanted to give you some updates on the plays that we follow in the stock market. Let me know your comments below. Other than that, we'll catch you in the next one.